In this video, I'm going to give you the answers to the top 5 questions that I'm asked on a daily basis as an accountant. First question I often get asked is, how should I structure my business? So whether you're a property investor, a business owner, entrepreneur, okay, you've got some kind of business venture, because property investment is still a business venture, and you're looking at how to structure it. Should it be in your own name, a partnership, limited company, an LLP? There's so many different options, and this is a very valid question I get asked, because the amount of tax you pay as an individual compared to a limited company, compared to an LLP, can massively vary depending on your situation. So my advice here would be, look at where you want to get to. So look at where you're going with the business, not where you are now, just because you might be making losses for the first year or two, but then if you're going to go to £100,000 profit in year 3, that will have a massive impact on whether you should be as a sole trader now but then go into a limited company. So ultimately what you've got to do is you've got to do the calculations to see, okay, am I going to reinvest the profits? Because if you're reinvesting profits in a limited company, the tax might be less than in your own name when you get taxed on them as and when you receive the money. These are the different thoughts you need to be putting towards it, and then ultimately doing the numbers. That's how us accountants do it. We look at, okay, so if I were to make £50,000 a year as a sole trader, what tax would I pay? Then you've also got, okay, a limited company. If the limited company were to make £50,000, you'd pay corporation tax, and you might have to pay more tax to get out of the company as well. But if you're in a risky activity and you want limited liability, a limited company might be the better option. You want to raise it, you want to look to get seed funded in the future or exit the business. Having it in a limited company structure could have other advantages compared to just tax. So that's the first question that I get asked a lot. Obviously, there's no set answer. It does massively vary depending on your situation, but there's a couple of things to look out for. The second question I get asked is, when should I get an accountant? So a lot of people just starting up in business, you probably want to keep money tight. You don't want to be forking it over to an accountant. Well, what I say here is, you're probably better off getting an accountant as soon as you actually can. The reason for this is most accountants operate on a kind of fixed fee or monthly fee basis. So if you get an accountant at the end of a year, where you've already made your potential mistakes, the chances are the amount you pay would be pretty similar compared to if you just joined one from as soon as you set your business up. You might be paying it as a monthly subscription, but then you get access to them. You can have a chat with them, you can speak to your account manager, and you can say, yeah, is this the right way? What tax savings can I do here? Have you got any impact on structure? You can ask these questions, whereas if you leave it to the end of the year, you've not asked the questions, so the chances are you've made those mistakes. So that's definitely one thing to look at doing, is get an accountant as soon as you can, because a good accountant should save you more than they cost you. I'd just like to tell you a little bit about a webinar that we're hosting. It's this Sunday. Don't worry if you can't make the live event, because we will be recording it, and it's all about saving tax on an international scale. So if you do want to move overseas, you're fed up of the UK, or if you want to do business overseas as well, this is the webinar for you. We're talking all about residence, domicile, corporate domicile and residence as well, and basically how you can have an international tax efficient lifestyle. Don't know if you know this, but I'm actually in Dubai right now, where there's 0% income tax and also 0% corporation tax at the moment. It's a fantastic place with fantastic quality of life. So don't accept what the UK has to offer. Click that link below and secure your space on the webinar now. The third question I always get asked is, how should I pay myself from a limited company? So as a limited company, it's a separate legal entity, and what this means is the limited company pays tax, so it's always going to pay corporation tax on its profits, and then whatever funds are left, it can distribute out. So you might be able to take a salary as well. Salary you can take prior to distribution, but you could potentially pay yourself a salary from a limited company, dividends, interest, director's loan repayments, and rent. They're the 5 ways to get money from your limited company for most people. From a tax efficiency point of view, it's usually interest that's the most tax efficient, because that's tax deductible in the company. You can receive quite a lot of interest tax-free using your personal savings allowance, your personal allowance, and your savings nil rate band. And there's also no national insurance on interest income. The downside to this is you do need a large enough director's loan account to warrant such a high interest. Most people don't have that, so it's usually just a case of salary and dividends. Anything else you can take out as well, maximising your benefits, your trivial benefits, things like that. There's tons more on that on the YouTube channel, so go check that out. Number 4, what expenses can I claim? Well, the good news is for most businesses, you can claim about absolutely anything. So anything that you incur in order to grow your business, you should be able to claim as an allowable expense. The one thing you can't claim, funnily enough, as a business owner is business entertainment. So if you take clients out for lunch, you cannot get tax deductions for this, but you actually can for staff entertainment. So other than that, you can claim most things: salary costs, website costs, marketing costs, accountancy fees, business premises rent, telephone costs, internet, heating, all of these different expenses that you pay for. Anything that you've got coming out of the business bank account, the chances are it's an allowable deduction. And a good accountant will also help you with the additional deductions as well, such as most people working from home, claiming some of your home as an allowable tax deduction, company cars maybe, and other different ways to get more out of your company. We're not going to jump into that on this video because we could be talking for hours, but have a chat to your accountant about these additional ways. But for most people, any expense you're paying, whether it's professional services, subscriptions, anything like that, think, okay, what am I actually paying, what's coming out of the bank? That should be an allowable expense, so make sure you're including it in your accounts. And also a bonus bit here, it doesn't actually have to go through the business accounts. So if there's a personal expense, because you're at the checkout, you haven't got your business card on you, you just thought, we'll stick on the personal one, keep those receipts. Because what you can actually do is claim that as a business expense still, just as you would when you used to work for somebody in employment. Perhaps you would put your expenses forms in and you'll get reimbursed in the month with your salary. You can do this for your limited company as well. So if you spent £100 on software for your limited company, you can actually get your limited company to repay that to you, and you also get tax relief on that expense at the same time. So it really is a double win. Your company will pay less tax and you can get more from your company tax-free. Win-win. Number 5 is, what can I do to reduce my tax bill? As vague as it seems, it actually follows on nicely from point 4. We definitely didn't do that on purpose, in that claiming all of your expenses. That's an obvious one, but a lot of people don't bother. They have poor record keeping, and as a result of this, they're unable to claim all of their allowable expenses. So that's one way of basically making sure that you pay the least amount of tax, is to make sure you're claiming as much as possible by way of expenditure. All of the business related expenses, claim them. All of your personally related business expenditure, make sure you claim that. Your mileage, if you're using your home as an office, make sure you're claiming that. If you're using your phone for business, potentially look at claiming that. If you're using assets, sell them to the company, and then you can increase your director's own account. You can get capital allowances on them as well. And basically making sure that you do as much as possible. Work with your accountant. Say to your accountant, can I be doing this? Are there any additional ways I can pay this tax? Ultimately, some accountants, they're not very good. So what you're gonna have to do there is either get a good accountant or do some research yourself. There are tons of YouTube videos, even on my channel alone, and lots more on Google. It's a very, very big place on ways to pay less in tax, and basically structuring your business so that you pay the least amount of tax as well. Just following on from that, so yeah, structuring your business right. It kind of goes on to point 1. But when you set your business up, you do it the first time. But as your business grows, it involves your goals, your ambitions change. Make sure that you are having these regular tax reviews. As you build more wealth, the more wealth you've got, the more liable and basically the more vulnerable you are to paying tax. So you need to be working with a good accountant, a good financial advisor, to make sure that you've got a whole holistic plan in place. Even just for the taxes that you pay when you make money, corporation tax, income tax, that's not the end of it. You've also got capital gains tax when you sell an asset. You've also got inheritance tax when you pass assets on as part of your death estate, or if you make lifetime transfers as well. There are a lot of different angles to it, and as a result, you need to make sure that you're regularly reviewing these. Speak with your accountant, speak with your tax advisor. You've got the day-to-day stuff, company cars, as we covered, but you need to look at the whole thing. And you also need to get a little bit clued up on tax yourself. You can't really rely on your accountant to do absolutely everything. Of course, they should be doing the bulk of it, and they should be coming to you with good ideas. But as a business owner, tax is probably the biggest expense that you pay. So it would make sense to kind of swat up a little bit and learn about it so that you can help bring that down. I hope you found this video useful. If you have, please make sure you give it a big thumbs up and also hit that subscribe button. Bye for now.